All right, so it says we're live.
All right, let's get it.
Oh, okay. All right. All right. Welcome. Welcome to tonight's chat with Mr. Kevin Jefferson, the People's Lender. I am Natasha Bazil, also known as Sold by Nat. And tonight's title is The Miseducation of Home Buying. I'm really excited tonight. I'm really excited to have Kevin here. We get the lender side of things. So thank you for being here, Kevin.
No problem at all. Thanks for having me.
And then also we're gonna shout out to Miss Jeanette Franklin, who is gonna be our comment MCer. Is that even a thing?
Admin in the back. She's doing
Yeah.
all the hard work.
Yes, yes, she will. So thank you for joining us. Listen, Kevin, when I was going through just about quick conversation that we had the other day, a whole list of things that we could talk about. We could legit have a live every week from now until the end of the year and not run out of things to talk about. So, so yes, thank you for joining us. Drop your comments in the chat, your questions in the chat. But I'm just gonna start, with different topics that we have here. Why the name of the title, the miseducation of home buying? Um, I'll go first and then I'll kick it to you, Kevin, because in this market, we are hearing a lot, seeing a lot. We're talking to people on a daily basis, and there's just a lot of misinformation, wrong information out there. People not understanding the full picture of things. Okay, I just heard. I think Kevin, I'm gonna shoot it to you because I
All
think my
right.
computer over there just started and it's talking in the
Okay.
background. So
All
so
right.
please tell us why the
The
topic
title.
is important to you.
Got you. So the miseducation of home ownership. There's a lot of good information that's available online. There's also misinformation being put out, and part of the misinformation comes from the person regurgitating the information, but they don't know all that's included. So we're not saying that everybody online is giving out bad information, because Natasha and myself, we're online educating folks. But at the same time, in order to speak on the subject, I think you need to know it in its entirety. So, like Natasha and I don't give full consultations online. We give you enough to say, hey, that may be me, and then we'll do a one-on-one to see if it makes sense. A lot of times, people regurgitate stuff they don't know, and you can tell. Like, you can tell they don't know the subject matter, right? And
Mhm.
if a person asks me a question and I don't know, I'm big enough to say, hey, I don't know the answer to that question, but I can get it for you. I think this is a great opportunity. If you're watching the replay, you're watching it live, you should have a pen and paper and be ready to take some notes, because we're going to dispel some myths. The myths come from situations and us talking to people on a daily basis, changing their thoughts, or helping them rearrange their thought process. Meaning, they think they heard it one way and they have an understanding of it being one way, but it's another way. So have your pen and paper, and if you have questions, drop them in the chat so that we can see them and answer them here live.
Awesome, awesome. Okay, well, let me just say, Kevin and I have known each other for years. I don't even know how long, but I know that Kevin has been in the business 19 years, right?
Yep, 19 years.
And Kevin used to be a realtor.
Yep, used to be an agent.
Yes, you used to be an agent. He is on the lender side. And I think you look at me like, yeah, I'm not doing the realtor side. And yeah, that's not for me. And I look at you like, yeah, I'm not doing the lender side. Like, yeah, it's a lot.
It is a lot. You guys
It,
have a tough job, and I think that they're equally difficult, but different.
okay.
Um, I People ask me all the time, which side do I like? I like real estate in general, so that's going to be
Hmm.
my answer. Um, But during COVID or now, showing 20, 25 houses, I never did that ever. So like doing that, and I'm talking to agents who talking about this, showing people stuff in Logan'sville, and then they might be down in Fayette County. That's an hour ride, you know. So the wear and tear on your body, the wear and tear on your vehicle, is a lot. So I commend you guys. I think you guys work hard. Sometimes people make it look glamorous, but you guys are in the trenches every day.
Yeah, I appreciate that. Thank you. Yeah, that's why it's very important to have consultations, make sure you're on the right page with your agent and all of that. But on the lender side, like shout out to you. You did a live. Please check out Kevin's channel for all the content that he puts out, his YouTube channel, his Instagram. Yeah, you put out some great content. And I was listening to the last live that you did with your lender friend. Like the lender side it's no one size fits all. Every situation is different. And I've had people come to me and like, okay, I'm ready to get started. Do you want to see my credit? Like that's not my arena, right? So the lender and I work together with, like, this is a team effort. Like you on the financial side, once you give me that green light, yeah, they're approved, ready to go, then I'm going to work with you to find the house. Like there is no way that I could do all that I do and stay on top of how things change on the mortgage side. So yes, kudos to you, and please go check out that live. That was a great live, by the way.
Thank you. Appreciate it.
Yeah, very much so. Okay, so we're gonna hop into it. Again, if you have questions, drop them down. Thank you. If you're watching the replay, go ahead and leave a comment. We will respond to you. The first kind of statement, and I'm going to get your input on it. Like this is my feeling. I do not see the entry to home ownership getting easier. And why? There's several reasons why I say that. I'm driving around and seeing all of these new construction rental communities, just entire communities just for rental. Like, I'm like, okay, read the room. Like, I see what they're trying to do. They're making it shiny and new, and come here, get comfortable with new. And people, I've talked to people, they have been renting for 9, 10, 15 years, and they will never make the move to work on their credit, get their stuff in order so that they can buy. Also, and I heard you mention this in your live, like things that you could get approved last year is not the same this year. So that just further confirmed it's not getting easier. So can you speak to that?
For me, the first indicator that it was going to be harder for people to get pre-approved with the same standards they were previously was when they had all the reductions in mortgage insurance. So mortgage insurance protects whoever's going to back the loan. It protects FHA. VA has a funding fee. They reduced it. They've had some reductions on the conventional side. They've had some increases on the conventional side. USDA is probably the only one who hasn't had any type of change in the funding fee or mortgage insurance. PMI, MI, it's a lot of interchanging terms. That was the first indicator. Okay. The mortgage insurance protects them. So if they're lowering how much mortgage insurance they're going to charge, that means to me that they're not going to approve as many loans because they don't have as many risks. So it does help the buyer reduce their cost per se, on a monthly basis, because mortgage insurance is included, but it's gotten harder. They want more reserves. They want to see a more qualified buyer, like somebody who, I always give my buyers this analogy. I, as the lender in my company, are looking to see who we can partner with to help buy a house. And you said, well, I'm putting down, 3.5%. And let's say that 3.5% equates to $14,000. That's a $400,000 house, right? Mm-hmm. But we're bringing $386,000 to the table for you. we have a bigger loss than you do. Like, we have more into it than you. So yes, the goal is to be a homeowner, but we still need to partner with the right person. If the highest thing that you pay on your credit is your car note, and you're constantly late on it, and your mortgage might be 2-3 times that amount, you're probably not the person we want to partner with. Because if you're not paying $600, $700, $800, how are you going to pay $2,000, $3,000? Right? We don't see the rent. In most cases, we don't see what you do with your rent. Now, some people will pay their rent if they don't pay anything, but then there's some people that will pay everything and don't pay their rent because you don't see it on their credit. Just depends on how you look at things, right? And then the other thing is, in terms of it getting harder, rates are going up, inflation. And, Fannie Mae, Freddie Mac, Ginnie Mae, all of the governing bodies understand that. So what that means is rates are higher, inflation's higher. So people typically have less discretionary funds because people aren't getting raises at the same pace that in properties, things are inflating. Gas prices, bread prices, you add all of those things that aren't included in what we look at. Car insurance is getting higher, like all of those, healthcare insurance, all of those things are getting higher. So we want to make sure we can partner with the right person. With that being said, the final thing is, the first time in our lifetime we ever saw the United States credit rating drop, which affects Fannie Mae, Freddie Mac, Ginnie Mae, all governing bodies, quasi-government entities. They're not government entities, but the government runs them. And they lend based off of credit. So all of those things are making it harder for people to buy. People are increasing their debt. Like, we're at an all-time high, and I forget the trillions of dollars people have in credit card debt. Like, all of that debt, all of that plays into how much we will lend to you, and it all plays into the algorithm of, is this person a good, valuable buyer?
Okay. All right. So I want to bring it down to layman's terms for some. All right, because you went real
I'm
high.
sorry.
Okay. All right. I know you got a lot up here, but let me ask you this, because I was just talking to somebody, and he submitted his information to schedule with me to have a consultation on my Calendly. That information will be in the description box. And one of the questions I asked is, what is your credit score? It was 610. And I was like, okay, well, you have some time, so we're going to want you to work on your credit, get your credit up. And I was like, okay, there are lenders that will do it lower, but you're going to have a higher interest rate. We want to see you at a 640. But then I looked into your live, and you're like, 640 is not considered, where you want to be now. I'm like, well, golly. So what is that number where you want to be at?
It differs. It's tough. It's a moving target, right? If we have two buyers that both have 640 credit scores, and buyer A has a higher debt to income ratio, and buyer B has a lower debt to income ratio, and they both have 640 scores, buyer B is most likely going to get approved before buyer A. Now, if buyer A still has a 640 credit score, as well as the high debt, but they have some type of assets, meaning they have some money in the bank, they have money in their 401k, something to show, hey, my debt's high, but if anything ever happens with my job, I have the ability to pull money from somewhere to help me with my bills. So that's what they're looking at. I've qualified people with 600 credit scores recently. It was a manual underwrite, and there was a few additional steps, and they had to have reserves. I had a lady that had a 660. We couldn't get her approved. Now, why? Because the 660, she didn't have any trade lines reporting. What she had was paid off. So you can have a score and have old debt that helps you generate a score, but that doesn't mean that you're really a 660. The system reads all of that, Tasha. Like if you haven't paid anything in years and you still have a score, that may hinder you because they look at length of credit history. So you may have those same two buyers. The person with the 660 just got out of high school, but they got a credit score of 640, I'm sorry. And then there's a person that's, let's say, 30 years old and had credit for 10 years. That person out of high school is definitely going to need reserves because their credit hasn't been established enough to say they're going to pay. But that same 640 with a 10-year history, they say, okay, this person has a long credit history of at least 10 years, and it looks like we'd rather take a risk on this person because they have established credit versus someone who's had credit for 2 months.
Okay, what I got, well, I got a lot out of that, but what I got is that the importance of speaking to a lender and not just listening to, oh, my friend had a 650 and they got it done, so they should be able to get me done. Like everybody's situation is different, and you have to talk to a lender. And I tell people, talk to a lender sooner rather than later, even if you have time, because if there's something you need to work on, like don't wait until right before you need to move to then have the conversation with a lender. Would you say that's fair?
Yeah, it's best to talk to us. Um, it's best to talk to a lender and find out where you stand because the credit scores we look at are not going to be the same as Credit Karma, Credit Wise, pretty much any of them. The only score that's probably going to be very similar to ours is the mortgage score from my FICO. That's going to be the most accurate. I always give the example of you can apply for a car, a house, and a credit card and ask them to give you your TransUnion score for all three, and all three are going to be different because
Mm.
each industry, even though it's financial, each industry has its own scoring system and algorithm. The FICO algorithm, right? It's FICO. When you look at those credit card, the credit card company gives you free credit monitoring or credit sesame or credit wise, those are Vantage scores, which are not scored the same. Now, I have seen Vantage scores that are lower than the FICO, and I've seen them higher. So even that's going to be different. My Vantage score may be higher than my FICO, and yours might be vice versa. So, going off of Credit Karma and them telling you, oh, you qualify for a credit card up to $10,000 and you got a 700 credit score, that may not be true. So, speaking to a lender, you'll get your actual mortgage score, and you should be able to get a game plan because it's more than just credit score, too. If you have disputes on your credit from where you worked on your credit, they never go away whether you're finished. So before it gets into underwriting, we require you to remove those disputes. Removing that dispute verbiage could lower your credit score because when you dispute an account, it no longer negatively or positively affects your credit. No longer negatively affects your credit. So then if we remove the dispute, it could drop your score.
Okay, that is why working with knowledgeable lenders is extremely important. And if we've had a home buyers consultation, I have shared this story. Like my first transaction in real estate, I'm at 12 years. Next year will be my 13th. We'll start my 13th year. My first transaction, 2 days before closing, I cannot get in contact with the lender. The day before, his manager reaches out to me and says that my client should have never been pre-approved in the first place. And that was my first transaction out the gate. And I was like, all right, all lenders aren't equal. Like, you can't, like, that's why when I'm telling people, like, you need to get a referral, I'm referring you, like, they're this deep. This is a lot of information. And then I've had people where, you know, they'll talk to a lender and then they'll just get like a fluff approval, like, yeah, we can do it. And then as they get into it and they really send in documents and things like that, they really can't, or it's something different than what they were told. I'm sure you get those where you tell them something and then have you ever had anybody come back to you?
I have. I've had people come back to me. I will say this and be in all honesty. Sometimes people get upset with me because of what I do in terms of the process I put them through. When I look at a when I look at someone's credit report in their file, I'm trying to look at it through the eyes of an underwriter to
Okay.
make sure there's nothing that I can think of or that I've run into that could create a problem. You know, I've had people say, "Oh, I've been pre-approved by such and such. They did it in a day," and I said, "Did you give them any documents?" And I know they didn't because they haven't given me everything.
Mm.
So she was like, "No, they didn't ask for them." I said, "Do me a favor." I had this conversation with a lady maybe about 2 months ago. I said, "Do me a favor." I said, "I don't know your realtor. Call your realtor and ask them which letter would they take. Would they take a pre-approval or pre-qualification?" And she did it. And she texted me back and she said, "My realtor says she won't show me a house with a pre-qualification. She needs a pre-approval." And doing a pre-approval is where I look at, or the lender looks at, credit, income, pay stubs, bank statements, tax returns, W 2s. But when we look at bank statements, most people think we just look at how much money's in the bank. We got to go line for line to see if there's any large deposits. We got to see if you got any insufficient funds. We got to see that you, like sometimes people have things that aren't on their credit that they have to pay out. Like, you know, sometimes stuff doesn't report. Sometimes it may report on your credit later and your first car payment come out, but it's not on the credit report yet.
Mm.
It's so many different things that we look at. And if you are a person that do a lot of transactions and you got 4 pages, we have to look at every line to make sure that we understand what's going on. If there's large deposits that are outside of your normal pay, we need to know where they're coming from. It's fine that you're getting money. Maybe your spouse is giving you money. Maybe your parents give you money because they live with you. We just need to know ahead of time so we know how to handle it going forward before it gets into underwriting. So yes, to answer your question, I've had people leave because the process seemingly was easier. And if you don't dig into it right away or up front, you're gonna have problems at the end. Biggest problems that we have is verification of employment.
Okay, let me ask you about that. So, verification of employment, do you do that in the beginning? Or is that something that the underwriter does at the end? Or how should it be done? Because I could tell stories about that one.
Yeah, we got a story about it
Um,
where the employer wouldn't give us the right verification of employment, but the lady had been there longer than the person doing the VOE.
oh, see.
And they tried to put on there that she had only been there for 3 years. And she's like, "I've been here for, I think it was either 13 or 16 years teaching."
Mm-hmm.
So to answer your question, for me, if you have standard income where you make $20 an hour and work 40 hours a week, and when you give me your pay stubs, they go together, then I'm pretty good on the verification of employment. If, let's say, school teacher, they're not getting overtime, their pay isn't fluctuating. The only way they're going to have additional pay is if they have an after school activity where they may be a coach or do something like that, right?
Mm-hmm.
So that's simple. A nurse who comes in on a shift where part of the shift is second shift and she gets shift differential or he gets shift differential, and then part of the shift is third shift where they get another shift differential. We have to know if they have a 2 year history of receiving the shift differentials, and we need to know, are they working, what's their guaranteed hours? Are their hours guaranteed to be 36? Because right now it looks like she works 106 per pay period. You see what I'm saying?
Mm-hmm.
So in that case, I'm going straight to the company and getting the verification of employment to let them document it, because that's going to allow for me to give the most accurate income that we can use. So for me, it depends on the scenario. Truck driver, the same way. If they get paid by the load and then get bonuses, and even though they're W-2, we just want to make sure that we calculate the proper income. But somebody basic, we estimate. Somebody that wants to use overtime, we will either get the last 2 years of pay stub, 2 years of last pay stubs, which will show what the overtime is broken down for each year, or we'll just reach out for a verification of employment. So for me, it depends upon the industry and type of job that they have.
I'm gonna throw something at you. Uber drivers, Lyft, DoorDash.
Self-employed borrowers need tax returns, need a 2-year history, and we averaged a 2-year history.
Do you do bank statement loans?
We do bank statement loans.
What's the trade-off? Is it a higher interest rate?
Higher interest rate, higher down payment, but no mortgage insurance. So the payments typically are around the same.
Oh, okay. It's a little gem.
So you could have 10% down and have no mortgage insurance. Your rate's going to be a little higher, but it could make up for the difference in mortgage insurance you would pay if you were looking to do conventional or FHA.
Okay. All right. So yeah, I just want to say like that was a lot. And I know it's a lot, but anything worth having is you're going to go through the process. But I don't promise my clients perfection, but I promise if you stick with me, I will navigate you to the closing table. When it comes to this lender piece, just give the lender your information, tell them your situation, and Kevin will figure it out. Like Kevin knows what he's looking for. And I mentioned that because I just had sellers under contract. The week before closing, the buyer cannot close because he did not disclose everything to the lender about his employment. He was VA, and it was just a whole thing. And I'm just like, if he would have disclosed all of that to the lender, like just tell them and let them figure out how they need to make it work. So just tell the lender. Okay. All right. Thank you for joining tonight. The Miseducation of Home Buying. We are trying to help you get your questions answered, get clarity, because I know there's a lot of messaging out there. You're seeing these 1 minute reels. It's like you can do this, but then they don't tell you about the 15 steps or the bylaws that come along with it, why it may not be as easy. So speak to the professionals and really get your information. Okay. All right. I got a question. Let me see if I can bring this up. What about retirees with a steady income?
Love them. I love
Why?
them. I love them because they typically don't have a lot of debt and their income is steady. If they get Social Security and a pension, those probably aren't going to change significantly. They're not going down, so they're only going to go up. And they typically don't have a lot of debt. As long as the retiree who has a steady income is likely to continue for 3 years, we can utilize it. If they have not filed tax returns on that income, because in most states, Social Security is non-taxable, we can kind of give you a little boost on that income because it's not taxable. So I love retirees. They're great.
Okay. All right. Thank you, Romaine. I appreciate that question. If you have any questions, please drop them down in the chat. Give this a thumbs up or a heart, wherever you're watching this on. Okay. For the people that say, I'm waiting for interest rates to go down to buy, is that the best plan? And I'll give my input on that. No one has a crystal ball, right? No one has a crystal ball about what is going to happen. So while you're waiting for interest rates to go down, and if you're waiting for it to get back to 2-3%, I don't know that we're ever going to see that again. That's one. And if we do see it, when are we going to see it? In the meantime, you are paying all this money in rent and not building equity that you could be building. Is now the best time for everybody to buy? It depends. It depends on your situation, but definitely do not just hang it up and just listen to everybody. Like, no, don't buy now. Wait for interest rates to go down. I do not think that is a great approach. And it's funny to me because I was out 2 weekends ago and I was talking to people that already had homes or invested, and they all had the same mindset, like, no, we buying. Like they just had a different mindset because they're familiar with the space. But if people that don't know, they get scared by the information and the messaging that is being put out. And I feel like they're on the fence. and it's going to be to their detriment. What's your thoughts on that?
Low interest rates is going to create high competition, right? Because that's what everybody's waiting for. Okay, I'm gonna wait till rates drop and I'm gonna jump back in the market. So, example, let me ask you a question to verify. On your listings, how many offers do you think you may average now?
So like right now,
Right now.
I am going to say it depends. It depends on price point and how it lives. But let's just say we get 4.
Okay. 4. So that's 4 people who are looking to buy, and let's say on a $350,000 house with a 7.25% interest rate, right?
Mm.
Let's say that same $350,000 house, and then interest rates all of a sudden drop to 6.25%. Let's say, 6.25%. People who weren't qualified for 350 now can possibly be qualified for 350. So instead of 4 offers, you might have 10 offers. And in that 4 offer situation, which is a lot in this market, to be honest with you, you're going to have heavy competition because now the seller is going to say, oh, a bidding war, give me highest and best. And if in that 4 offer situation, the seller can go for highest and best in this market, when there's 10, they're probably going over asking price for the person to win.
Mm-hmm.
Typically, where there's multiple offers, I say anywhere over 1 or 2 offers, now you have to probably take out any closing costs you're asking for. You probably got to close faster, put down the largest earnest money deposit, maybe put down a larger deposit. Larger down payment to get to that price point where you bid over. So it creates a lot of more competition. And even though interest rates go down, it may cost you more money because you have to put more into it. A larger down payment, no appraisal gap. So if the property's 350 and you offer 370, and as long as it comes in at 350, that means you got to bring your down payment of whatever it's going to be. Let's say it was 3.5%, and then you got to bring the additional $20,000 to cover that gap between the 350 and 370. That's what will bring that. That's what lower interest rates are probably going to bring. On top of, there's still a housing shortage, whether it's high interest rates or lower interest rates, and builders can't build fast enough. It's going to bring out more competition.
Right. Okay. All right. All that. We still are on one. Like, we are 30 minutes in. We're still on one. Okay.
I'll shorten my answers.
No, it's good. It's good. Okay. Let me, 2 things that I hear a lot. One is I'm a first-time home buyer, so I'm a first-time home buyer. Like, people think that being a first-time home buyer, that qualifies them for something. There is no such thing as I'm a first-time home buyer, I'm about to just get like 5,000 because I'm a first-time home buyer, right? That just qualifies them if they qualify for down payment assistance or closing costs, correct?
Correct.
All right. So there is no such thing as you're going to get something special for being a first-time home buyer. So that next thing goes to down payment assistance. I have heard of people that make $100,000 wanting to use down payment assistance programs. Should that be a thing? Like, you always trying to go a down payment or closing cost assistance? I feel like there's a trade-off. There's a higher interest rate. There's a trade-off for you getting this money, or is that incorrect?
No, there's a trade-off. So if there are some national down payment assistance programs who don't care how much you make or where you buy. The trade-off is they want you to stay in that house for a certain amount of years, from 3 to 5 years, and your interest rate is going to be slightly higher than market. That's the trade-off. Well, why? I'm a first-time home buyer. Because you're borrowing somebody else's money.
Mm-hmm.
And the only way they're going to forgive it is if you stay in the house for the allotted time they want you to, which is between 3 or 5 years. And the reason why they want you to do that is because they're servicing the loan, so they can kind of recoup some of that when you pay your payments.
Okay. You mentioned earlier about having skin in the game. Using down payment assistance, it's really not giving you skin in the game, right?
It's
That's
not.
still not your money.
Nope. It creates a layer of risk.
Okay. Is there a such thing as buying a house with no money?
It was at one point.
Okay.
It was at one point. Like I had done deals years ago, where my buyer got their um, earnest money deposit back, or escrow, depending on which part of the country you're in, escrow back from using USDA.
Okay.
Um, but now, because housing prices are so expensive, and not just the interest rates, but you have discount points to get that interest rate, it's very rare that somebody walks away with a check. Um, I think I recently seen somebody got back $500, but I seen that online, so I don't know how true it is.
Okay.
But it's tough.
Okay, but you should have money saved. Like you're going to need to have money
Money.
saved to purchase a house.
Yep.
Okay. All right. If you had to tell somebody one way to get their credit up, what would it be?
Pay down your debt.
All debt? What if a debt is 2 years old? Should they pay that down?
Pay down your current debts. Let me
Okay.
be more specific. If you have credit card debt and your utilization is above 30%, paying it below 30% helps. Getting it to 10% maximizes the scoring potential. Caveat to that is some people say, well, I'll just pay it off. Sometimes paying it off doesn't get you as many points as leaving $100 balance. That's why you need to talk to a lender, and they can run it through the simulator and tell you where you need to pay that Capital One or American Express card to.
You just mentioned the word, a simulator. Can you tell people what a simulator is?
So what happens is you come to me, you do an application, and when we pull credit, we then have access to something called a credit simulator. What the simulator will do is, hey, if Natasha pays down her Capital One balance to $100, and in 30 days, what will her score be? If she pays it down now, what will it immediately jump to? And then we also have something called like a wayfinder, which like, can we find a way to get the score up? So then we'll simulate the wayfinder, and we simulate it with saying, we want this person to have a 680 credit score. What will it take? And it will spit back data to us to let us know, what they need to pay it down to, how long it's going to take. And sometimes it says not possible. So that simulator, it's way more powerful than one you can get on your Credit Karma has a simulator. It's not nowhere near as accurate as the one that we get. And it's a forecasted score. I have seen it come back where there was a shift, maybe like 3 points. One time I've seen 3 points to the good, and one time I've seen it where it was 2 points off.
Okay.
And what happened was, I figured out what happened was, in the midst of us doing the simulator, the person paid off a credit card. So that extra, let's say $35 they paid off, took their balance lower, and then it just changed the algorithm of how it scored. So it's crazy.
So that's why I tell people, the lender didn't, once you get pre-approved, the lender didn't tell you to do it. Don't do it.
Don't do it.
Don't do it. Okay. And just FYI, not all lenders do this. So not all, if some people, if you do, some lenders, if you do not have a cookie cutter situation, it's just like, no, we can't help you, and just go along your way. So that's why you need to work with somebody that's going to give you the information and get you there. Okay. I do a lot of I work with a lot of people that are relocating. So if somebody is relocating, and they do not have their job here, or they haven't gotten their transfer yet, or however the case, and they just contact you and say, Kevin, I live in New York, I want to buy a house in Georgia. Can I do that?
Yes, it's possible.
Okay.
It's a couple of different layers,
Okay.
but it's possible. Um, there is a potential, like if you're a remote worker, then when we do the verification of employment, one of the questions is, does buyer A have the ability to work from home all the time? And if the answer is yes, then we can go forward. Their job can be of the pay in New York, and they can buy a house in Atlanta or wherever part of the country you're in. If you can't leave your job right away and you have family that needs to move and they need your income, you can buy. You would have to have, we can establish that your spouse and family will be here and that you'll be coming back and forth, most likely on your days off or holidays. And we can do something called an FHA non-occupant co-borrower. And we can do the same thing with conventional financing. Again, another type of transaction that we did.
Right.
Yeah,
Right.
another
Okay.
transaction. So it's possible. If you don't have a job in Georgia or wherever you're at, wherever you're relocating to, if you don't have a job there, there is an option. It's a little bit more expensive, but you can buy a second home. You'll
Okay.
have to put 10% down, but that still allows for you to have a home in Georgia that you'll be coming back and forth to until you get a job. So that's another option. It's a little bit more, but it's less than an investment property.
Okay. And to go back to your first point was, if your employer says that you can work from home all the time. I did a video on that because some people just assume because you're working from home that you can work from home. And I want to say Jeanette had somebody that that's what they thought, or one of the parties thought. And when they got their verification of employment, the employer was like, no, like that they can't move out of state. So you always want to check that before.
Sure.
I don't know why they went so deep in the process before verifying that. That's why I asked you earlier, like, should they be doing that up front? Like, why are we waiting until the end of the transaction? Okay, so there are different options. How about an offer letter, right? Can you just use an offer letter, or do you need to show pay stubs as well?
You can use an offer letter and
Okay.
we'll verify it just like a verification of employment. We have to make sure that the person is going to be working X amount of hours. So let's say the offer letter says that buyer A is making $50 an hour. Well, that doesn't tell us that they work 30 hours. Are they working 2 hours? Is it 40 hours? So we do a verification of employment. And can, as long as the person is going to be moving and starting that job within 60 days of moving in, we can use it. But we have, of course, we get the offer letter and we verify with the employer. And then, so I want you to listen to this and listen to it good. We will reach out to you after you close within 30 days of when you start the job, because we're going to need 30 days of pay stubs after you've moved in. So don't duck our calls.
Kevin, I'm going to ask you the obvious right now. I'm already in the house. I already have the keys. What you going to do then?
Call the loan due because
Oh,
it's a stipulation.
okay.
Run us our money.
Okay.
Yeah.
I'm glad I asked that question because I know I was not the only person thinking about it.
Yeah, and sometimes it takes a while for us to get a hold of the people for whatever reason. Sometimes, out of sight, out of mind. They got what they need from us, but then they'll start getting letters, and then that's it. What does that mean to us as a lender? If we don't have all the documentation when we go to sell that loan on the secondary market, we have to eat it. And if we have to eat it, we can call it due.
I need you to break that down for the people that don't know.
People
So
don't know.
for you, is the business of your business to be able to sell that loan, that
In,
note, that paper.
in most cases, yep, because we got a warehouse line, right? Typically, lenders have warehouse lines. Just say that Natasha and I do $1 million of business in a month. That's $1 million of warehouse funding that is gobbled up. So what we try to do is some lenders package those loans and they sell them off so they can free that $1 million back up
To be able to do more.
to do more loans. Because it's not an endless, I wish it was an endless money pit, but it's not. You got to replenish it. That's why when you buy a house and you were with Bell's Cargo and now you go with Skank America, that's because we sold it. We sold that loan to them so we can free up our warehouse line. So when loans get sold when they change servicers, the terms don't change. It's just them freeing up money.
Right. And if you can't sell it, then that puts you in a bad position.
Yep.
So that is why underwriters are going through things with a fine tooth comb to make sure that this file is good and we'll be able to sell it.
We need to do a part 2.
Okay. Ooh, it gets deep.
Oh my goodness.
Oh.
It gets way deeper than that. And I may be sounding like it's high level, but it is. Because at the end of the day, right, Tasha has her commission check, the buyer has their house, the seller has their check, the listing agent, everybody has their information. But in some cases, there's still problems going on after that loan closes. There's things that may have got rushed through, things that we thought we had and we got it clear to close, but we didn't. And secondary has to reach back out to the borrower. Let's say we close a loan and we try to sell it off and it doesn't have the documentation, or HUD say, oh, we're not backing this because we don't have everything we need. Let's say that borrower isn't a good borrower and all of a sudden they end up having to sell their loan. They had to sell their home within a year, less than a year. They come back for the commission that the lender got. So there's buybacks. Not sometimes we run into problems where the borrower doesn't make their first mortgage payment on time. And guess what that does? That draws a red flag. And not saying that all people in this bracket are, but typically the people who don't make those payments are low credit score FHA borrowers. That's why they ask for everything in a sample of your blood, because they want to make sure they can get everything from you. So my buddy Aaron said it best. Would you lend to yourself?
Yes, because I've taught people and they're appalled. Like it's almost like a sense of kind of entitlement. Like I should be getting it, but it's deep. Like you're asking somebody to lend you 300,000, 400,000, and you have these lates. So essentially, okay, y'all don't come for me for this, right? Like, if your credit is in the 4s and the 5s, like something has happened in the past. There is an indication. There is something that is there, right? It's okay. I don't want to put my foot in my mouth, but it's something there. Like, would you lend to you? We're gonna leave it there.
Right.
Would you lend to you? If you have continuous late payments, would you lend to you? Are you a solid, and you might, everybody has hard times, people fall on that, but yeah.
Like I always tell clients, if they, and just as a way of encouragement, right? If you have a low credit. Your credit score is not who you are. It's where you are right now. Like Natasha says,
Mm.
something may have happened. Sometimes I can look at a credit report and tell they probably had a loss of work or something big happened to take their money because the lates are all within a certain period of time, and then all of a sudden they're back on track. It's an indication of where you are right now. That's not who you are. I've had jacked up credit before.
Oh, me
I've had
too.
late payments before.
Me too.
I had late payments when I was a realtor. You know what I mean? And I was making the money. Sometimes you might forget. You might not have had the credit card on auto pay. You might have thought that your payment was coming out on the 30th, and that's when the car payment was due, but all of a sudden you get paid on the 31st. All of those small things happen to people. Um, and that doesn't mean you're a bad payer, but they can't discriminate and decipher between who's who.
Mm-hmm.
And the underwriter's not going to talk to you and ask you, "Oh, okay, what happened, Mr. Jones? Oh, okay, Mr. Jones, we'll let you go. Nah, Miss Smith, that's okay." So they just have to have general guidelines, and then we just have to get around them.
Right. And I know I said earlier, like all lenders don't, like, say somebody needs to work on something and you tell them. I've also had it to where you tell them somebody what to do and they don't do the things. So you can lead a horse to water, but you can't make them drink. So we're going to lead you to the water. That's what we're going to do. So, okay. All right. Next one, where are we at? Okay, we're coming up on an hour. So again, thank you guys for joining in, for watching. Drop any questions that you have. Like we could go on and on. But the biggest thing I want to clear up any misconceptions that you have. If you are thinking about buying and you're just like, oh, the interest rates, please speak to somebody. And I even tell people this. I remember back in the day when people were like, I don't think I can buy. I don't think I make enough. I don't think. It's better to find out than just assume that you can't afford. So please just speak to a lender. Don't let interest rates not being in the threes and fours hold you back from buying. Do you have anything you want to throw out there?
Yeah, I think that starting with a lender and getting pre-approved is definitely key. Um, I think that doing the application is important. It's super important because one, we can only go by hypotheticals if we're not looking at the information. You may be missing something, right? You may be saying I don't have any debt, and the lender may not ask you, I don't pay anything, or this is what I pay. My car, I got a couple of credit cards, or because your student loan is a zero balance, there's still something have to be factored into it, right? Oh, I'm still in school. We still have to use some type of student loan payment included. Um, you may be counting in your income and not tell us, oh yeah, I get $500 child support, but the kid's 16, so then we can't use that child support. Oh, I make $5,000 a month, but 700 at a month is overtime, and you've only been getting it for 5 months. We can't use that overtime. So there's so many different factors into it. And then you may say, well, I have $2,000 credit cards. They both have $100 a month payments. I'll just pay off one. Well, which one should you pay? Like where you going, you can write this down, where you're probably going to get your more bang for your buck is if you pay down the balance on the older credit card. Because let's say you had one for 2 years and one for three, and you paid it one for 2 years, that may not boost your score as much as paying down the one that has 3 years.
Wow.
Let's say you've got $2,000 balances. One credit card payment is $100 a month, the other one's 75. Oh, I'll just pay one of them down. And let's say you pay down the one that has a $75 a month payment. If you took that same $1,000 and paid $100 down, the $100 went down a month, that gives you 25 more dollars of buying power. All of those small things matter.
Okay.
Most important thing, if there's anything that I tell buyers, and you can listen to my lives, is just to apply. Even if you think your score is at 500, just apply so you can get a game plan, because you may have a 500 and it might be an error on your credit, or you might have to pay something down and it boosts your score over a couple months. That's to me, if you walk away with anything, just apply and then get a game plan.
So questionnaire, when they apply, how much is it dropping? I've heard this. I don't want to apply because it's going to drop my credit.
0 to 5, 0 to 5 points. So I had a young lady who applied, and I told her it would drop. And when we pulled credit, she got an instant notification. Your credit score dropped 20 points. This was from Credit Karma. I said, no, it's not dropping 20 points. I said, what's your score on Credit Karma? And she told me. And when we pulled it, it was way higher by like 50 points. So Credit Karma will also tell you that you have 14 days to shop. You've got 45. I tell people 30 to 45, because in that 30-day period, you may have some things update on your credit that could affect your score going up or down in that time frame from when they talk to me or Wells Fargo. But just apply, get a game plan, execute the game plan. And then the last thing, and maybe I'm taking this personal, I would go back to the person who gave me the game plan, because I've had it happen to me where I gave the game plan, they executed it, and then went somewhere else. And then I asked them why. They said, because I could get a lower rate. And I told them, you would have never got that if I didn't give it to you. It's only fair, right?
I get it. But you may have gotten them that rate.
Right.
But they never gave you the opportunity.
Nope, because they didn't come back.
Reminds me of a Chris Brown song, but I won't do that. Okay. All right. I know we talked a lot. We went high level, but the biggest thing is talk to your professionals. Talk to Kevin, talk to myself. I'm glad I had you on so we can get the lender perspective on it. And I really rely heavily on my lenders. That's why when somebody brings somebody to me that I've never heard of, aside from praying, I need these people to be worth their weight, because once I'm going out there and shopping, I do not want to hear, oh, my bad. I don't want to hear that, because now I'm taking that pre-approval and I'm running with it and I'm getting you in a home. So yes, thank you so much, Kevin. So you gave that advice. My advice again would be, don't let fear hold you back. There's so much information out there. We are in an age of information overload. You can just swipe, and then you hear you need to buy a multifamily. You need to wait before you buy. You need to try this trick before such and such. Like, I know it's overwhelming, but you have to focus on what your goals are and get with the right professionals, and still stay the course, achieve your goals. So yeah, we're going to wrap that up here. Kevin, share your info.
I am Kevin Jefferson. You can find me on YouTube under Kevin Jefferson / The People's Lender. You can find me on Instagram at The People's Lender. My contact information will be below if you would like to schedule an appointment with me. And I do want to say thank you for allowing me to speak to your empire, your group, to your group. And I want to say this. Your team is very important. When I say your team, your loan officer, your realtor, they're important. Them working together is important. Them getting along is important, right? Because they're working on behalf of you. There's things that I provide and I need to provide to the realtor, and the realtor, me providing certain information to the realtor about you and your circumstances in terms of your approval allows for them to put forward the best effort when they make an offer, right? If they're not receptive to being creative or different ways outside of their norm because they've never heard of it, that could hinder you. You know, that could hinder you. Make sure you have a knowledgeable agent, and make sure that you ask them all the questions you need to ask about the buying process. If you don't get the explanation that you want, instead of saying, oh, they don't know what they're talking about, I don't understand them, ask them again. Just ask them again. You know, sometimes I explain things in a way that's in mortgage language, and then I have to break it down to somebody. And then the second time when I break it down to them, they understand. And that's the same thing sometimes with realtors. When they go through the process, when I give you that pre-approval letter and you do your consultation with your agent or Natasha, all you think is I'm pre-approved. I want her to show me $400,000 houses and exactly what I want, and everything else that's pertinent to it doesn't get heard. So you should definitely when you meet with me or you meet with Natasha or whoever your lender and realtor are, have a notebook so you can write it down, and just make sure you get your questions answered. If there's a spouse involved, probably have that conversation with that lender and that realtor at the same time, so he or she doesn't have to re-explain it, or we're not depending on you explaining it to your spouse because you may not explain it to them. So we understand. That's somebody that doesn't do it on a daily basis telling somebody else who doesn't, and the information may get misconstrued.
And you say spouse, it could be a parent, whoever you're on this loan with, whoever you buying it with, whoever the decision makers are. Let's be in here together. Yep. Thank you, Natural Nubian. Awesome. Thank you for joining in. And yes, when you are out there about to work with an agent, the first stop should not be going to look at a house. You should be having a consultation, going through the process, making sure you guys are on the same page. So you definitely want to have that. If you're interested in having that with me, you're in the Georgia area, you can schedule with me, calendly.com. Well, my information will be down below, but it's calendly.com/sold by Nat. IG, all my socials, all my profiles are sold by Nat. And even if you're not in Georgia and you need me to refer you to a like agent, contact me and I can help you with that. Thank you to everyone who joined in. I hope you got something. Any questions, do not hesitate to reach out. And if this is your first time seeing my face, you haven't watched any videos, please go and check out some past ones, check out Kevin's channel. But just know, like, when I bought my first home, I did it wrong. Like, wrong. I was just signing paper. I had a $30,000 balloon payment. I'll figure it out. I did it wrong. So I help people do it the right way. So we're going to sign off here. Again, thank you for watching. My sign out. Have a positive, peaceful, and productive day. Kevin, how do you sign out your channels?
Thanks for watching. Have a good night.
All right. Bye, guys. Thank you.